Hi everyone, welcome to the video. Now, you can't see my face, I do apologise. If you're new to this channel, make sure you have subscribed, hit the bell button, leave a like. It is freaking warm where I live right now. If you don't know this, I've mentioned it before. I have like a front facing window which has the sun glaring into my room. I have two huge studio lights. I wear a hat. I can't have my fan on. I can't really have the window open much, so it gets a bit hot. If you are new and you've not yet checked me out on Twitter, make sure you have. We're going to talk about inflation. Is it a bullish case for Bitcoin? We're going to talk about deflation. Is it going to create the crash? Yeah, we're going to have some great fun in this video. It is not bearish, don't worry. We just got to talk about it. Everything happens for a reason. You've got to be prepared. Now, as I say regarding my Twitter, check out my pinned tweet. Not everything requires USD prices to go up or down to make some severe cash in the market. Make sure you realize that. Anyways, 5.4%, boys and girls. This is what the latest element of numbers is right now in the US inflation calculator. This is a great website, by the way. I highly recommend you bookmark it. Why is it important? History. History may be repeating. I'm going to explain in brief terms what inflation is. I'm going to explain in brief terms what some big key figures think. I'm going to explain what deflation is as well and why it's important to the maths in terms of the previous levels of inflation and de-inflation rates back in the old crash. And then we're going to look at Bitcoin. Is it going to be a hedge against inflation? I don't know. We don't know yet. We'll talk about it. However, going back in time, I want to focus you on 2007, 2008, 2009. Increased inflation in 2007. Monster inflation in 2008. The economy obviously crashed at that point. And then 2009 was horrific anyways due to the fact of the fallout of the crash with huge, infrastructural problems around the globe. Nothing was happening. It was absolutely awful. De-inflation. Or deflation, sorry if I get my words right. It's important to look at this. So we're currently right now I think we're on a crash course for a crash. And I've said this before and people go, no, you're talking absolute shit. Stop talking, go away, I've unfollowed you. But realistically, you look at the S&P, you look at the NASDAQ, you look at the dollar index as well, you look at all these global metrics, the Wall Street, the DJI. Wall Street, the Dow Jones, look at it. It's freaking so overbought. It's freaking on next level, parabolic cycle. It's crazy, right? Add inflation into the mix, add quantitative easing into the mix, add all this kind of fake money, which creates this problems. The previous crash was due to the bonds, due to housing bonds and housing credit and cheap, shitty credit that essentially wiped people out. Oh, you've got 2 arms, 2 legs, we'll give you a house. Whoa, okay, thank you, I'll buy 3. That's kind of what happened, right? Whereas right now, it's a bit different. We're just belt feeding money to save the economy, which doesn't make sense. So, something's going to happen soon, in my opinion. So, what is inflation? It is the cost and the measurement of goods. Simple as that. Prices and services. So you go down the street, you go into a shop, you buy a bottle of pop. It's more expensive than what it was 10 years ago, right? That is inflation. Every year it tends to go up a little bit, but 5.4% is a lot, okay? Compared to the last year, compared to the last 5 years, so on and so on, right? That's it. Simple. Now, I mentioned before key figures. This is Michael Burry. If you don't understand or know who this guy is, he's an absolute legend essentially in the stock market for basically predicting the old housing crash, which I just talked about. Now, essentially, movies made out of him, but he predicts, and he has been mentioning it for a while, that there's a potential financial crash and it's going to collapse at some point. These crashes, by the way, don't happen overnight, but realistically, if you look at the conditions, a 10-year bull market is always going to be a head scratch anyways, thinking, well, this is going to turn around at some point. And I've mentioned my investments in stocks and stuff, very, very minimal. I'm waiting for the crash to happen. I'm waiting for things to gradually just keep descending down. Then I'll dollar cost average into some good positions over a period of maybe a decade. I don't know. Depends how long they last for, right? But realistically, I'll be looking to do an investment strategy based off that. I'm not going to buy tops. There's no point. Just wait. But when you look at this overall, this was like old data, but realistically, even still, he has been talking in the Wall Street Bets forum on Reddit about a potential crash, which is kind of important to know that he's still relevant. Now, let's talk about Cathie Wood. She thinks that the consumer prices and the risk and the future is going to be deflation, which is kind of what happened in 2009, over time. Right, when we think about it, there's been a huge impulse in that quantitative easing, that money printer going burr, and all kinds of other stuff to create those really, really high inflation rates over the course of this year. Now, if I go back to this page here, you can see it's ballooning, and it looks very, very similar to what was happening here. So it's important to note that. And what is this? This is the other way around. This is where we go into those negative numbers, minus, and essentially it's like removing something from your life that you used to love and cherish, and then it's no longer there, right? Basically, like milk off a goat, or if you're feeding an animal or something, or even a baby, right? They get used to it. They get used to the idea of that supply, and then the demand goes, and then that supply goes, and guess what happens? No one's caring, no one wants it, and then the consumer prices will eventually decline because the price of those levels have changed due to the fact that you are no longer belt feeding it money. That is essentially what will happen. So essentially, deflation is a general decline in goods and prices, typically associated with a contraction in the money supply or credit. So if you remove that, contract it away, pull the pants down, off you go, my friend. Now carry on running your business without it. That will then create a difference. So that will, that the purchasing power of that currency over time will change, which is kind of problems. Basically, becomes more expensive, and then the power of that currency, will obviously increase. Therefore, everything will decrease. Does that make sense? I hope so. It's crazy. Anyways, one thing we need to talk about though is this article here. I think I'm on the paid one. I don't even know. Realistically though, right? This is important. Yes and no. So to answer the question, is Bitcoin a potential inflation hedge? Potentially. But it isn't a sure thing yet because we don't have the price data. If you're looking at data alone, we're still young. We're still like 10 years old, pretty much, give or take, in terms of real market values. If we're going to go from like a 10-year certainty point, I know it's a bit older than that, but realistically, we've got to think, well, if you're building an algorithm or a systematic approach to kind of be an investor, you've got to look at data a bit longer than 10 years, personally, to be classed as an inflation hedge. So we don't know yet. Now, whether it is or not is another thing, but you got to look at other things as well. Gold, for example, classic cars, even watches, for example, property, bonds. Yeah, they are, but realistically, bonds could be at risk in terms of this, in terms of deflation. You got to look at the value of store of value, right? Bitcoin could be, but we've also just suffered a 55-60% crash recently. It's not really that good, but realistically, a lot of other things have gone down, but the stock market hasn't. What we're looking at overall with Bitcoin is the long-term hedge, not the short-term hedge, in my opinion. I think Bitcoin will crash if the stock market comes down. I mentioned it before, people hate that, but realistically, Bitcoin is a 24/7 market, which people can easily pull money and resources from as liquidity, because it's a great liquidity provider and it's instant, versus the stock market. If they've got option calls, if they're over-leveraged, they will use that. But if the prices do go low, people may well put money or percentage of wealth into cryptocurrency. Certainly Bitcoin, for example. Maybe Ethereum when the updates happen with the maximum supply sorted. Who knows? But at the end of the day, it's far too early. Will everyone use it? No, definitely not, because it's far too speculative. But some people will, and certainly it is a good place to store some value. Now, the next thing to talk about with Bitcoin is the obvious as well. Bitcoin tanks even as inflation jumps. This is like a brand new article. Inflation jump, boom. Hello, cool, whatever. But we're still dropping. The market sentiment's still not there. I think that is just pure fear and greed in the market. The greed has got people, and the fear is affecting people's decisions right now. When you look overall at the data here, you can see the CPI and the changes overall. Even though that's totally changing and Bitcoin has totally dropped in price, that's kind of an alarm bell. And you can see here, respond to the inflation alarm appeared all-time high, but as it kept accelerating, the sudden reversal kind of happened. So that's kind of like, oh my God. So this is why we can't really go 100% balls deep and think, well, it is, because we don't know yet. At the end of the day, I think it's going to be a long-term sort of element. I think if you are buying Bitcoin low, or any sort of good wealth asset in terms of anything, the rule is you got to buy it low. You can't just buy it all because the inflation's going up. You've got to look at your options. If people are like aping into, and we all saw what was Michael Saylor was saying, oh, sell your house for Bitcoin, and then obviously it dumped. Ultimate sell signal. At the end of the day, if you can find a good value or a good store element of Bitcoin at a certain price point, it's much, much better. But essentially, this is the key quote here. Using the CPI as a metric, Bitcoin flops as an inflation hedge. So you got to look a bit more clever than just, I'm going to buy Bitcoin, I'm going to hold Bitcoin for a life. I do not have all my wealth in Bitcoin. I invest in Bitcoin. I invested in Bitcoin in a while. I grow it via the means of my pinned post, which is why I mentioned it at the start of the video. Make sure you watch that. It's very, very important. Now, when I talk about that, it's because I don't want to keep belt feeding money into it. I want to put my money elsewhere. I want to put it into stocks. I want to put it into all kinds of other different metrics and make it work for me. Bitcoin is only one entity. You can't just go all in on it. In my opinion, anyway, you can't just go all in on it because it may not work. It may totally go the other way around. Certainly, if you're looking at an inflation hedge. So, what do you think? Let me know. It's a bit of a waffle video. I do apologize, but it's big information essentially that we need to kind of digest. For me, if Bitcoin goes to a certain point and you're thinking long term, it may be absolutely fine. In terms of the trend, it's looking quite good long term, but realistically short term is very, very speculative. It's very, very volatile, and you can't just ape into it at $65,000 and expect to come out singing and smelling the roses at the end of the day. So you've got to be careful. Anyways, I hope you enjoy, and I'll speak to you very, very soon.